Good afternoon, ladies and gentlemen. A very warm welcome to you on Business Ray Television. We continue with our quest to find out quality earnings that may have very strong legs beyond the fourth quarter. And in that connection, we are now discussing the fourth quarter performance of genset engine maker Cummins India, where sales for the quarter gone by rose 7% year on year to 2,470 crore rupees. Quarterly profit was at 530 crores for the quarter gone by ending March versus 539 crores in the same quarter a year ago. The stock has surged dramatically, up 7% on fairly strong volumes. Two reasons there. One, the market expects that the worst is behind in terms of the stock correction, and of course the earnings are very, very strong. To discuss the future course of action, we are now joined by Ms. Shweta Arya, Managing Director at Cummins India. A very good afternoon to you, ma'am, and firstly, congratulations, you are now in the C-suite. Good to see Nari Shakti at the top of Cummins India. Congratulations once again.
Thank you so much.
Okay, now let's begin discussing what the performance has been. Of course, sales are up a modest 7%. How do you think is the profit trajectory from now on? You've done somewhere like 539, 540 crores for the quarter gone by.
So going forward from here, we would say that across all our segments, power generation, industrial and aftermarket, in the domestic business, we are seeing demand. And we have been working on efforts internally to make sure that the cost of our products is optimized. So we are continuing on those efforts. The demand, we see good demand signals. And we believe that we will be able to sustain the margin performance going forward.
Okay, let's discuss the margins first. If you look at OPM, it was at 21% for the quarter gone by. Sequentially, it's gone up by about 200 basis points, which is in the third quarter, it was 19%. But year ago, it was 23%. So a slight dip year on year, but sequentially, it's gone up. Would you want to comment on the margin trajectory from now on?
So the margin, actually, if I would draw your attention to the overall margins for the year, the financial year, and if you compare that to the last financial year, we have made steady progress. Quarter on quarter, things can change based on the product mix and the project execution that's happening. So quarter on quarter can be different, but overall, if you look at the year, we did make progress from a margin perspective. And like I said, we do expect to sustain our margins because we continue on our efforts on cost optimization.
Okay. Operating profit margin, ladies and gentlemen, for Cummins in March 2025 stood at 20%. It's been a very, very strong progression if you look at it from the point of view in March 2023. It was 16%. Before that, it was 14% in March 2020. The operating margin for the full year at Cummins stood at 11 percentage points. So you can well imagine what the trajectory is, and this is what Ms. Arya hopes to continue in terms of what the present number is. Let's break up the demand for diesel gensets, ma'am, sectorally and geographically. Where do you see the maximum demand coming in as far as the quarter gone by was, or maybe if you can just give us a broad cross section of how the year panned out?
So for the whole year, power generation, as you would know, underwent emission changes up to a certain level, up to 800 kilowatt hour.
Yes.
Below that, we went through an emission change and CPCB 4 Plus product was launched. Above that, CPCB 2 continues. We saw, I'm talking only about the domestic power gen business, we saw demand across segments. So whether it was data centers, which has been showing demand growth, not just in India, but globally as well. Segments like residential realty, commercial realty, infrastructure related segments, manufacturing locations. So there was the demand for us last year was very broad based. It was across segments. And if I were to say the year that we are entering into, we see that continuing. From an export perspective, we also supply power gen products around the world, and different quarters saw different markets showing up demand. Largely, I would say Europe and Latin America have consistently shown us decent demand in the last year, which we have been able to fulfill. Yet, from an export perspective, how the geopolitics moves going forward, how the trade deals are negotiated remains to be seen. And that will show us how each market behaves from an export perspective.
Okay. I think Cummins was also blessed by material costs as a percentage of overall sales slipping a bit, which is actually good. You were able to control raw material costs. Is that a trend that you see continuing for the current financial year as well?
That is the focus that we put in internally. It's a lot of hard work to control our direct material cost, because that is the way we are continuously able to provide value to our customers as well. So it is an effort and our focus area, which we absolutely will continue in this financial year as well.
Fair point. So 63-64% is what is likely to be in these quarters ahead as well. Should we take it as given?
63-64%, you meant capacity utilization?
No, I meant material cost as a percentage of overall sales.
Yes. So from a material cost perspective, we do expect to be in similar range. Yes.
Okay. Next, come to the next question from the hint that you gave in the previous one. What has been the capacity utilization at Cummins for the year gone by, and is this likely to continue?
Our capacity utilization has been close to 65%, and we do continue efforts to put in sustenance capex year on year to upgrade our lines, to continue optimizing our capacity. So that work will continue in this financial year as well.
Okay. Ma'am, you would know better than anybody that these global command centers that are being set up in India by a lot many MNCs are one of the biggest and the primary drivers of growth at Cummins India. How has overall demand from this space grown in the calendar in calendar 2024? If you can just give us some clues into where they are headed. Are they geographically towards the southern side, maybe Andhra, Telangana, Tamil Nadu, Karnataka?
So if you talk about global capability centers that are being set around India, for us,
Yes.
they form a small part of our growth. A larger part of our growth has been segments like data centers, residential reality, commercial reality, manufacturing segments. So those are the ones which have given us higher growth. Definitely, global capability centers being set up also generates demand for us, and that has been continuing. It has been around the country. So to say, not necessarily concentrated in one location, but as I mentioned, it is a small part of our growth.
Fair point. When you look at capacity utilization again, which you say somewhere in the vicinity of 64-65%, ma'am, when would you think a fresh capacity would be needed by Cummins India in the form of maybe a greenfield project or a brownfield expansion that you would do to existing facilities?
We continuously evaluate the need of such facilities. Over the last years, we have been upgrading our manufacturing facilities, automating them, bringing in more productivity improvements, enhancing capacity, optimizing it. So we are pretty well positioned right now, and we continue monitoring when is the need for a greenfield capacity. As and when we reach that stage, we will surely share that. As of now, our continuous efforts to optimize our capacity and the continuous investments over the last few years are helping us.
Okay. And how about new pipelines in terms of different kinds of engine? Now we are moving from, say, diesel power. There is this massive thrust towards hydrogen. How do you think globally Cummins is positioned to take that up, not only across the globe but even in India?
Globally, we are following a strategy called Destination Zero, where we want to move towards zero
Yes.
carbon emissions by 2050. And under that, we have been working and putting in R&D expenditure globally towards various technologies which can replace diesel over a period of time. As you will appreciate that we are present across different segments around the world, and so is the case in India. The answer for different segments will be different. Diesel had R&D work of 100 plus years. Moving out of diesel will take a period of time.
Yes.
Different segments will move at different paces, and different segments will decide differently. So one solution will not fit everyone. So our endeavor is to be technologically ready with a portfolio of technology solutions, and that's the work that's happening. We are also working with customers in India and around the globe to help them on which solution works best for their specific application and for their country. So the answer for India for that specific segment will be different, because how is the energy available in the country, how practical it is, how feasible it is. So we are working on that in India and globally.
Okay. What's your gut feel about its practicality and feasibility in India?
So there are different technologies available, I would say, and we have that portfolio available. Like I said, different segments will move towards different technology. I won't be able to say there's one technology that every segment will adopt. So there is absolutely feasibility. We definitely need our country's infrastructure to move in that direction, to be able to have energy sources alternate to diesel available just the way diesel is available today. So that work will also happen in parallel as we work with our customers towards them adopting new technology solutions.
Okay. A bit of a word on how borrowings have shaped up. You have consistently made an effort to keep your balance sheet light. From what I see, there are just minor borrowings. The number is so insignificant that I'd rather not mention it. Is this a concerted effort to keep the balance sheet free of debt?
Yes, it is an effort. And we try to manage our working capital well by focusing on inventories and our receivables to ensure that we have a healthy balance sheet.
Yes, if you look at receivables, they've also come down. Yes, debtor days, 80. Yes, of course they have. Going forward, ma'am, how do you see the tailwinds that are now with us, in the sense that India is now the fourth largest economy? It's just overtaken Japan. We see a very concerted bid by the government of India to maintain its capital expenditure via the budgetary allocation. Anything that you see as green shoots coming in from the corporate side of the economy? It's been often said that corporate India hasn't picked up the baton from the government in terms of capex expansion. What is your view on this?
We do see some shoots in some segments where private capital expenditure has started improving, but it is some segments. It's not very broad based. Our belief is that with the government capital layout, it will fuel the private capital also coming in. It's a matter of timing, because of the uncertainty in the global environment. When that settles down, our belief is that it will start picking up.
Okay, fair point. Anything that you would want to comment on the dividend payout? It's now 71% of your profit after tax. It's huge, actually. It was 61% in the year ago balance sheet, 56% 2 years ago. Is this a trend going forward? You'd like to distribute more and more profit to your shareholders?
That is what our endeavor will be. That if we are generating the right amount of cash, we would like to share healthy dividends with our shareholders, most definitely.
Any forward-looking statement in terms of top-line expectations for the current financial year, profit after tax guidance that you would like to share with our viewers?
We have maintained, even for this year, for the coming financial year, a double-digit revenue growth. And that is what our anticipation
Yes,
is.
15%.
We do see domestic business demand across the segments where we operate. Exports, there are good efforts internally going on. Definitely how tariffs settle down, and once we know exactly what the tariff situation is, we will be able to say better. But domestic demand we definitely see, and hence we maintain our double-digit guidance on revenue growth for the financial year.
Okay. The profit after tax stood at a very nice 2,000 crore rupees for the year gone by, and when you divide it by the year ago number, which is 1721, you get a 16% rise. Will this also be maintained in the coming year, this year?
Our effort will be in that direction. Definitely the margins and therefore the PAT finally is a mix of the segments, the product mix that we see, how pricing settled down in the market. So our endeavor will be in that direction.
Wonderful. With that, thank you so much, Ms. Arya. What a pleasure to interact with you on the fourth quarter and finally a performance of Cummins India. We look forward to such wonderful interactions in the coming quarters as well. All the good luck to you.
Thank you so much.
That, ladies and gentlemen, was Ms. Shweta Arya, Managing Director at Cummins India, where full year performance has been 15% higher on the top line at about 10,391 crore rupees, and profit after tax for the year gone by is at 2,000 crore rupees, up 16% over the year ago number. The capacity utilization stands anywhere between 64 to 65%, and the company is going all out to maintain its operating profit margin at 20% in the coming year. Thank you so much for watching. Please continue to be with Business Today Television. The market as flat as can be on the monthly expiry of May. Nifty down 28 points, Nifty Bank about 220 points lower, and the IT index at about 180 points higher at 37,646. Cummins, of course, is up 7%. The stock reacting very, very positively from the sales number that has come in, and of course it had corrected very substantially from its all-time high of 4,400 rupees to what it was yesterday, and therefore you see this bounce coming in after such earnings. Thank you for watching. Remain glued to Business Today Television. Good morning, ladies and gentlemen. A very warm welcome to you on Business Today Television. We are now on the last day of May F&O expiry for Nifty, its constituents, and of course all the stock futures that are listed on the National Stock Exchange. For the moment, it's a flat trade, and it's a disappointment.